Hey folks, Lucas Balahood here with Coldwell Banker and the Balahood Group. Welcome back to this week's segment of Finance Fridays. Alex Job with RBC is here with us to chat a little bit more about the recent changes that we saw last week, Bank of Canada. Alex, how are things in your world?
Very busy and a lot of questions lately around this interest rate topic.
Yeah, no doubt, no doubt at all. So just to reflect on that for a moment, the Bank of Canada announced on March 2nd that they were increasing the overnight rates by 25 base points up to 0.05% overall. And this certainly is going to affect things in your world at RBC, Alex. So I understand the fixed rates have increased, but what's that going to do for people who have or maybe are on a variable mortgage? And what are their options if rates do start to climb throughout the year?
Sure. So a client that is on a variable rate with that increase of the overnight rate change, what we saw was our prime rate go from 2.45 to 2.7. So depending on if a client had an existing variable mortgage, that increase would not change their payment, but it would really change how much is being allocated to principal and interest. So those clients that are thinking about a variable, you just really need to know and be prepared for more, future interest rate increase, because they are expecting that to happen. And for a client that's on a variable that's maybe feeling a little bit uncomfortable, they do have the option to lock into a fixed rate. So if they want to get off of that roller coaster ride and they just want to secure something for anywhere between, 1 to 5 years is our most common, 5 years being our most common, you could just fix it and not have to worry about those interest rate increases in the near future.
Now, I think we talked about this in a previous edition of our segment here around when you change from a variable to a fixed rate, you don't lock in at the variable rate that you were on. It's actually the day new fixed, right? So your rate's going to lock in at a different one there.
Whatever the current rates are at that time, you're going to be, if you go to lock in at the bank, you're locking into a fixed term that is the length of your remaining term or longer. So if you were recently on a 5-year variable term and 1 year has passed, you wouldn't have a 3-year option to lock into. You would have a 4-year fixed rate or a 5-year fixed rate to look at. Okay. And then your payment would be adjusted. Your contract would be signed again into that term, new term.
Now, you mentioned there as well that, as the interest rates increase on the variable, that's going to impact, the ratio between principal and interest that's on our payment. So is that based on the assumption that we're going to be keeping our monthly payment the same?
The same, exactly. Now, if you were to increase your payment, which you have the option to do, then really you're staying on top of it and you're adjusting your payment to reflect the new interest. So just to give you an example, Luke, if you were on a rate of 2.45, okay, the prime rate was previously 2.45, and we've seen a 25 basis point increase, that would, on a $500,000 mortgage, that would reflect as $60 as an additional interest portion. So you'd want to, a prepayment option as simple as a minimum of $100 up to double your regular principal and interest payment. That would, just do it right there to keep your payment schedule and amortization in place so you're not falling behind on your mortgage. Interest rates are going up, and then you can increase your payment as well.
Amazing. So at least it's, with the changes that are going on in the market right now and how that's affecting, buyers, let's say hesitation, in this market right now, it's certainly an interesting time of year, and it's some of the things that we're seeing in the real estate world, and certainly it's going to be influenced by what's going on in the lending side of things. So Alex, this has really been helpful in helping us understand the differences in our options that we've got out there with the increased rates coming into the Bank of Canada. So we're obviously going to stay tuned for what happens in April, and we're going to have to be in touch to talk about this again and see what's going to happen here down the road.
Sounds good, Luke. That's great.
Wonderful. Well, thanks again for joining us. Folks, if you've got any questions for Alex or myself, our contact will be at the end of this video here, and we look forward to being with you again soon. But until that time, bye for now.